In our newest stock breakdown for Shift4, we're kicking off the year with a rare combo: serious institutional buying, cheaper debt, and a chart that finally remembered what a full green candle looks like. Welcome back to Fintech Spy, where we don't just trade the volatility. We zoom in on it, overanalyze it, draw 3 different fib levels, argue with ourselves about risk management, and then make fun of the whole thing. If you're new here, hit that subscribe button for more chaotic fintech breakdowns, terrible market analogies, and occasionally accurate memes. Let's hop right into Shift4. Quick reminder, I am not a financial advisor. This is not financial advice. If you're making real trades based on a parody segment, you probably shouldn't be trading. This show exists purely for entertainment, education, and the shared coping mechanism of watching candlesticks together while pretending we're emotionally stable. Kicking off our first new segment in these reviews, Analyst Updates. The story for Shift4 this week is all about what hasn't changed. No new initiations, no dramatic upgrades or downgrades, just a quiet wall of buy ratings with a few holds sprinkled in. The average price target is sitting around $92, and we're currently trading well below that neighborhood. When almost everyone on the street is either a buyer or at least neutral, and the stock is trading at a discount to their math, that's the kind of setup that makes me start counting how many entries I want, not whether I should be here at all. It's not the kind of headline that gets a flashy thumbnail, but sometimes no change from analysts while the fundamentals and news flow improve is exactly the quietly bullish story you want. This past week and weekend, we had a couple of SEC filings worth paying attention to, the kind of boring news that actually matters if you care about who owns this thing and how much it pays on its debt. First, a Schedule 13G showed that Wasatch Advisors LP decided to load the boat back on December 31st, bringing their total ownership to roughly 6.78 million shares. That stake works out to about 10% ownership, confirmed by the CEO of Wasatch. If you were wondering whether anyone with real capital thinks this level is attractive, that's a pretty loud yes. If this isn't a confidence boost that we're near a bottoming zone, I don't know what is. Second, an 8K filed January 5th detailed a change to Shift4's credit agreement, cutting the interest rate on nearly $1 billion of outstanding borrowings from 2.5% down to 1.5%. That's real money when you scale it over that much debt, less going to interest, more left over for growth, buybacks, or just not lighting cash on fire. Between a large holder quietly moving to 10% and management locking in cheaper debt, the message from the filings is pretty simple. The people who know the numbers best are comfortable leaning in at these levels. Let's get into the multi-timeframe chart analysis. On the weekly chart, it's goodbye red 2025 and hello green 2026. If there's a way to start off a new year, a full-body green candle is definitely on the short list. Price pushed up nicely. The stock RSI is still below fully overbought, and the MACD is closing in like it wants to flip the medium-term trend back in the bull's favor. If this isn't the chart saying, I'm at least ready to try a rally, I don't know what is. What I want to see next week is simple: a higher low and a higher high, to keep building that classic staircase pattern up instead of doing the old trap and dump routine. On the daily chart, you can see that staircase starting to form higher lows and higher highs. But there are 2 obvious pressure points. First, we're getting stretched on the RSI, flirting with overbought. Second, price is marching straight into the 50 EMA, which has not exactly been a gentle line of resistance in the past. The ideal script here is a controlled pullback to cool off the RSI and shake out the late chasers, and then a proper run at the 50 EMA with fresh energy. If we can cross and hold above that EMA after resetting momentum, the odds of staying over it go way up, instead of doing the classic touch, reject, cry formation. On the 4-hour chart, it looks like we've flipped the 500 EMA from resistance into support, with a string of candles now closing above it. At the same time, the RSI is pulling back toward oversold, which sounds scary until you remember price hasn't actually broken that EMA support while it's doing it. This lower time frame still has plenty of room to move. A fresh intraday bounce off that EMA could draw in more short-term traders and quietly support what the daily and weekly are trying to do. If the 4-hour keeps defending that moving average, it becomes the little engine that could behind any bigger trend change. Looking at the January 16th options chain for Shift4, the market is pricing in roughly a $4.80 implied move in either direction. That's enough to matter, but not enough to scream panic. More like, we expect movement, just not a fireworks show. On the put side, open interest is clustered around strikes that basically say, we're fine with a pullback toward the low 60s, and especially around $60. That's the crowd either hedging downside or hoping to pick up shares on sale. On the call side, the focus is more optimistic, looking for a push up toward the $70 zone. That's the new year, new breakout segment of the chain, betting that this green weekly kickoff has more follow-through in it. If I were starting a position here, I'd be eyeing cash-secured puts around 67.50, getting paid for the chance to own the stock a little lower while taking advantage of that implied move and the recent upgrade in the chart. For Shift4 traders, this week finally feels like a legit fresh start instead of just another chapter in the 2025 grind. You've got a big institutional holder stepping up to a 10% stake, management lowering interest costs on close to $1 billion of debt, a full green weekly candle, and an options chain quietly pricing in a decent move without full-blown drama. Big picture, forward doesn't look like it's collapsing. It looks like it's trying to turn the corner. The weekly is shouting, "I'm ready for a rally." The daily is building a staircase toward that 50 EMA, and the 4-hour is doing the grunt work of holding support while indicators reset. The real question is whether buyers follow through into next week or whether this was just a very fancy dead cat stretch. If you agree, disagree, or think Shift4 is just winding up for the next meme-fueled comeback, drop a comment and we'll spy on it next time. If you think this whole chart looks like emotional damage drawn in candlestick form, tell us your coping strategy below. Coffee, memes, or setting alerts and walking away. And if there's another ticker you want roasted on this channel, throw it down below and we'll put it under the Fintech spy microscope. No guarantees on price targets, but we will provide world-class over analysis and high-quality